right. Hello, Facebook, YouTube, everybody. So we are live here. We've got Aaron Clark, obviously, with our team.
Hi,
And then
guys.
we've got our main lender here, Richard Lamotte from Movement Mortgage. He's going to drive today and talk and all at one time. No,
He's a
not
multitasker.
Multitasking.
Yeah, multitasking. Yeah, and answer all your questions that you have. So, welcome you guys. Thanks for being here, taking the time out to do this. So,
Thanks for having me.
Yeah. So let's talk about what we're going to talk about today, right? So what are we going to discuss, Richard, today?
All right. The difference and the significance of properties being tagged as either a second home or an investment. Second home is going to be in a property that you actually occupy some part of the year. You don't have to have a set time. You don't need to do 6 weeks as long as you are occupying it at some time throughout the year, a vacation home, so to speak. Investment property is going to be one that you're strictly going to rent out, whether it's weekly for Airbnb or if you're doing it monthly, just like any other typical rental. Earlier this year, Fannie Mae and Freddie Mac have tagged second homes as investments as much higher risk loans than in the past. So down payments getting stricter, credit scores are getting stricter, interest rates are much, much higher than primary. And this all happened literally like right around February timeframe. Second homes used to be similar to primary with the rules that they had, the interest rates, that type thing. Not anymore. They're now almost as high risk as investment. Excuse me. Second homes with perfect credit, you can sometimes get away with 10% down, but typically you're going to see 20% down, or the rates are just not going to be too favorable.
Oh, wow.
Investment property, you can even get away with 15% down. This is with us. Some lenders are stricter. Most of the time, you're going to see 20% plus on an investment home. Like you guys have bought some in the past and did the 25 to get the rate
duplex, right?
See better rates at 25% and up. Something that gets tricky with both of with investment homes is the credits. So many times nobody does repairs anymore. We just negotiate some money at closing, whether it be towards a contractor, closing cost, whatever it is. With an investment property, no matter how much down, no matter the loan size or anything, it's a max of 2%. So super important to remember that when you're negotiating on an investment. Second home falls in line with the primary when it comes to credits. With 5% down, or excuse me, less than 10% down, it's 3% seller credit max. 10 to 25% is a 6% seller credit max. 25% plus a 9% seller credit max. So it's always going to be based on down payment. And if someone's doing 25% plus, that really gives you a lot of bargaining room at 9%.
Yeah.
So it's more of a sliding scale, and that was for second homes?
Yeah.
Correct. That was for second homes. Investment, a flat 2%, even 50% down, still a maximum of 2%.
Yeah. I find that kind of weird, though, a little bit. Like you get more allowance for more money you can put into it. It's yourself.
Less risk. Yeah.
Right? Oh, is that what it is?
Yeah. It's less risk for the investor, but in my mind, it just doesn't make. I think that for some reason, any loan type, they don't like enticing the buyer to purchase by using money. And I think it's a competitive thing. They want to keep the market more competitive for everybody. The same playing field. Right. If you don't limit it, it could cause, I got a fence when I bought my home, or that kind of thing you're hearing out there. It doesn't affect risk in my mind. I really think, this is my opinion, that is the competitive factor involved.
Yeah. Huh. So that's interesting. Yeah, the allowances occupy some time. Yeah.
And that can be big because I won't say most, but investment properties can usually be the ones that end up needing a whole lot of the repairs anyway. That's going to be a huge thing for somebody looking to purchase one. They're usually not going to get one that's just moving ready.
2% of 200,000, you're not getting $4,000.
Right.
Yeah, that's not going to be too much of a repair being made, unfortunately.
So they have to keep that in mind for sure.
Yep.
Yeah.
The buyer is allowed to escrow repairs. He can actually do them himself. The seller is also, if it's called on the appraisal. The good thing with conventional appraisals, very rarely do we see repairs called, luckily. Not as strict as our government loans when it comes to repairs. But the home inspection is usually where the negotiating comes into play that I've seen lately. There's always something on these homes that are, more than 10 years old that needs fixing always.
Right. Huh. Well, that's interesting on both of those. Because I know we've done, obviously, a few of these, but for investment type loans. So that's good to know. I didn't even think about any kind of allowance or anything. So.
Oh, yeah. Everybody just kind of, because we do so much VA, it's easy to fall in the trap to think 4% no matter what.
Right.
Every loan type is different. And then, of course, conventional has that extra with the investment, the extra restriction.
Yeah.
So it's always a good practice. I don't care if it's USDA, VA. A lot of people think it's 4% flat. It's actually 4% on top of closing costs.
Right.
So that 4% could be strictly for repairs, and you can still give credits for closing costs. A lot of banks don't understand that. They don't. They limit you to a flat 4. But VA itself, their rule, closing costs are fine except for discount points, and then on top of that, another 4%. So always good to talk to the lender, because some lenders restrict you above and beyond what the norm is. So always check with that lender to find out what your negotiating power is.
Yeah, and it's funny you brought it up. I won't mention who they are, but there was a bank, a bigger bank, like a military affiliated bank, that I had negotiated 5%. I think it was 4%, not 4%. It was like 4,000 in close or in allowance, and they came in and said no, but it was VA, and I said, well,
I was going to say the important part of that story is that it was a VA. Where
it was a VA, right? Exactly, and I was like, what are you talking about? But like, no, we don't allow that. No matter
I remember
what.
you calling me on it. If it's the same one I'm thinking of.
Yeah.
Richard.
Yeah, probably. It was a couple years ago. This one was because it was a big problem for the sale because the house needed new carpet. It was rough. Sure. And so we clearly went in there and said, look, we're good, but we on allowance, and we negotiated. They're like, yep, we'll give it to you. And my buyer was like, great, so I can get that taken care of. And then we were like 2.5 weeks, almost 3 weeks in.
And all of a sudden, bam.
The bank's like, well, no, we can't do that. I'm like, what's a VA loan? You can do that. We don't do that. I'm
right. Like, yeah, every bank's a little different.
Okay. We lost it. Yeah.
Oh, yeah, that'll make it fall apart for sure, yeah.
Yeah, we were so far in. He was so disgruntled. I think, and it didn't go well for me. He was very upset, but with everything, not just me, but I was part of that. And I was like, look, man, we can change lenders.
Even crazier is that the lender was given the contract when it was first executed, but it wasn't caught until underwriting.
Right. Yeah. At least a week or so in. Yeah. It was bad. So he ended up buying a house, and he had to buy it like it was. It was rough, and I feel bad.
Again, that's something to remember. That's a good way to get people away from some of them online lenders. And and we know the bank you're talking about. You can maximize your credits by going somewhere else. You could be your buying power could be limited by going with this bank or that bank. So maybe another way to steer people in the direction you want.
Look, that's a great next podcast. We should talk about that. Like, what would be the differences here and there?
Banks versus local, or banks versus somebody
online,
that you can actually talk to.
Unions,
Yeah, because I've got a bunch. I've done a video on this before, but mine are, basically, a lot of it's not anything with loans or even what you thought of right there, Richard, was the incentives or bargaining.
Yeah, that's something that getting a lender's perspective on would be really important. I think that
I had it on an agent perspective, which was, a lot of other stuff that he doesn't really equate to money, but it equates to time and effort and You know,
Blood, sweat, and tears.
To me, that is money for me, but I don't know. You know,
That's right. Yeah, that's right. Yeah,
But,
you get these online lenders and the credit unions. I would always not just send the contract, but approach it right off the bat. Hey, this is what's going on with this transaction. Are you able to complete it under these circumstances? Because if not, we probably need to look somewhere else.
Yeah,
if they're going to limit you definitely want to find out day one, because I promise you, they always let you know 2 days before closing.
Oh, and at that point, everybody's trying to get paid still. So all these vendors have already been out there.
Yeah. Try to rush at the tail end. Yeah. So I'm in a deal right now. We're almost 2 months delayed with a big lending company. Right. I'm on a listing side though. So, but I'm like,
Richard's like, who?
Hey, and we're still waiting. And we got an email. I said, what is holding this thing up, man? I mean, if I have to make calls or writes, I'll do whatever it is.
Right.
And they sent the list, and I almost went ape crap. I was like, you got to be due diligence verification. 2 months into this, I said, we don't have that. What have we been doing? Like,
knowing that it was given to them.
That was like a month and a half ago. Like, we're just trying to get that.
You address in the first 72 hours. You need to.
I mean, I even was lenient. I'm like, look, even if it took them 2 weeks to figure the due diligence, I'm okay with that. But we're talking 2 months, and you're still needing that. Like, I was thrown back. Yeah. And some of the other stuff, I'm like, holy crap, man, we're not gonna close this thing for another month.
Yeah, that's something that's really suffering. Banks are slower. All of us are slower than we were the past 3 years. Kind of got spoiled, but attention to detail is something. When it's slow, there's no excuse for not having it. You're not in a rush, not overloaded. Time to maximize attention to detail. But
that's a good point.
That's what I see a lot.
Yeah, that is a good point. And like, even for me, I'm very like, hey, look, I know there's going to be delays. We're good with that, But I mean, when we're delayed and then delayed almost a whole nother month too, like, whoa, some of these things, I'm like, how are we just trying to figure this out now? Where have we been for the last month and a half? But that's typical of communication of some, it's
Richard, your people are always on it. I know for a fact they're coming after us for copies of things, like you said, within 72 hours. Even before we have it yet, and they're like, "Can we have it?" Yes, I promise.
I love it. Like I always say, man, I like it better if we owe you guys anything.
Yes,
and you always making sure, like Angie and you, hey, look, we need this. We need,
Oh yeah,
we got it. We're on it.
Instead of being like, oh, they need this. Where are they? Where is my lender?
Right.
Has this progressed at all? Because I still have this. You haven't.
Right.
Yep.
It's so easy to keep people updated. You order an appraisal, send the email right away. Appraisal ordered, due this date. It's such an easy thing, but people just, I don't know, they just don't think it's necessary to keep everyone informed.
Yeah.
It was a lot easier when we're all on the same page.
It is, yeah. So I'll give you one more piece to that deal I'm in. So we're over a month past closing at this point. I get an email about a light switch in the attic. Hey, can we get that photo of the light switch in the attic? And I was like, this can't be for me, right? It's got to be wrong. So I'm back. I'm like, are you sure this is the right deal here? Yeah, right deal. This is the address. Yeah, we need that picture of the light switch in that. I'm like, I don't have any idea of a light switch in that. What are you talking about? Oh, it's an appraisal contingency. So now we're already a month past closing.
Right.
And this is the first that he was told of it.
Yeah, and I'm like, an appraisal contingency of a light switch there in the attic. It was missing, the cover of it. Huh?
What type is this?
I think it's a VA. So that's a whole nother piece. They went back and forth. The husband was the primary. Then he had something come up on the credit. They put the wife as the primary, and they had to switch them, and all this. So I know there was going to be a delay, but so I think it's a VA again. I'm pretty sure, and I have to go back and look at it, but I know it started VA. But so the appraisal, I got the contingency a month.
VA, they shouldn't even be going in the attic. Yeah, that's crazy.
They did. Well, it was one of our common appraisers, Richard, that we talk. We know of.
One of the VIP ones that we love to see him come through.
Always wants to get his extra 125.
Going to get it regardless for a reinspection.
That's right. Yeah. So I was like, yeah. So I took a pic. I got it done. You know, they gave it to me on a Friday, by the way, at 3:00. I had it all replaced, everything by Monday, got in the picture and everything. So anyways, but it's been a crazy nightmare on that.
Yep.
My poor seller now, man, he's paying 2 mortgages. He's already moved.
I'm sure.
Yeah. And he's like, man, what is going on? But look, man, I don't know if I could do it. I'd do it. I can't. But. All right. So from our perspective, real quick. So active homes on the market, single family, we got about 472 right now, which that's almost double.
Yeah.
The past months on actives, single family in Onslow County.
Very good news.
And then last month for September, we had 436 sold, about right in there in Onslow County, single family. We've been hitting 500s normally, but so it's slowing down there a little bit. And then, of course, now we have more listings. You know, I only did single family, and
that's way better than a lot of the surrounding areas. Much better.
Yeah.
Probably.
Yeah. So we're seeing a little change here. So how are you doing with loans? Has it slowed down for you? Has it?
Well, I mean, I had a couple of my 2 biggest months of the year were August and September, but my biggest problem is people getting under contract. I've got 1 million people out there looking for houses,
right?
Constantly losing out to cash buyers or somebody bringing above and beyond. So that's been the biggest problem is people getting under contract.
Yeah, getting them executed.
Yeah, because I slow down if people don't get under contract.
Right. Sure. Yeah.
Calls don't pay the bills.
Yeah.
Right.
Right. So
we know that. True.
Yeah. Absolutely. So, question for you with that is from the lender side, based on the interest rates being different than they ever been. Now, are you seeing now closing costs going back to like a VA buyer needing a lot more?
Yeah, definitely. Because the lower credit scores, those people are really having a tough time because to get a rate that they, is even reasonable or keeps their debt to income in line, people are having to do discount points again. And I haven't seen that in forever. Yeah, that hurts. Your median price of $260, that's $2,600 extra if they have to do a discount point to get where they need to be.
Right.
I have seen some sellers giving credits lately, $3,000 or $4,000 here and there, which has been encouraging because I didn't see that for like 6 months.
Yeah. So
here and there of that.
Yeah, that's a great point. But I just for me, right, being a lot of listings, I've seen a lot more deals or offers come in with a chunk of closing, like $7,000, $8,000 on $195,000.
Oh God, yeah, it's been more. It's definitely. That's usually the discount point.
Yeah,
they're including that in. Gotcha.
Oh, okay. So I just want because even my investor, he's like, look, I'm good at like $3,000 to $4,000. He's like, man, these things are now $8,000. Yeah. He's like, holy crap! And the one buyer
insurance. A big part of that is insurance has had a big hike this year. So you do the 12 months in advance, and then you do another 2 months in escrow. That's another $1,000 right there, depending on home price, just for escrowing insurance.
Yeah,
that's
excellent, excellent point. Yeah, so that makes sense. I just wanted to make sure I asked you. Obviously, I do that all the time. I bother you.
Like
I see something, I'm like calling Richard.
USDA right now, almost every lender I talk to, unless you've got perfect credit, literally like 780 plus, there's no par rates. Like there's some discount point, a half to a full, almost every time on USDA. I've never seen that ever.
Wow. Huh.
Like lender credits, that ain't happening now.
Yeah, I bet.
Yeah, it's crazy.
Yeah. Wow.
Some buyers are starting to see, I will say, just sometimes, it depends on the house, are starting to get some of that back, though. It used to be like buyers asking for $5. No, can't do it. But they're starting to get a little bit more again. So it's like
a little bit more generous lately,
Yeah. Yeah, I mean, it's going to turn again where sellers are going to be hurting. They're going to need to,
This year is one of those years you just got to survive.
Yeah.
Work a little extra harder. I think next year we're going to see it be more favorable. At least I hope so.
Yeah, right. Yeah, absolutely. Huh, interesting. All right, well, look. What's that?
I said constantly changing.
Yeah, right. It is. Yeah, and you just got to keep, if you're always consistent, then that's what I would say. If you just stay consistent with what you do.
Adapt is the right word.
And keep.
Yeah, you constantly got to change to how the market dictates. You can't just demand everybody cater to how you like to act or
right.
Yeah, and then just let it take you away. Just let it overcome you. You can't do it.
Yeah, that's right. Good point.
Yep, absolutely. All right, well, look, we don't have anything else. We know you're on your trip, Richard. We want to thank you for taking the time out on the drive. It's good to talk to you, man. Good to see you. And, that's it. So hopefully we answer some questions on the second home and the investment. Right, I know I learned some stuff.
First-time home buyer and North Carolina housing down payment assistance next time, if that's good.
Yeah, we'll do that one next month, right?
All right, guys.
All right, Richard, you have a great day. We'll talk.
Good. I'll probably talk to you later.
Yeah, I'll be available. Right. Have a good day.
All right, you too. See you, Erin.
Bye.